All right, yo, what is up, everybody? Welcome to today's trade recap. Today I did end up taking one trade. It says two trades because I partialed out, but I did end up taking one trade today, and it was a W for, as you see, 199.52. But across three accounts, that is, do the fucking math. It's basically 600. So yeah, if anyone's saying like, oh my god, like it's FOMC, like bro, if you're literally a trader, this is perfect time to trade. Like literally look at the fucking market maker model right here. Look at that shit. Like how much more perfect could it possibly get, bro? Shit, look at that. That shit is literally sexy. Anyways, as you can see, we had all these stacked highs here. If you watch any other video, normally I go through like a bias. There wasn't really much of a bias coming into this news. Like I knew we wanted to go short initially. I just didn't know if we were going to continue or turn around. As you can see, we did hit this sell side liquidity, which was a daily fair value gap. As you can see right here, it was a daily imbalance that we did end up hitting. We went lower than it, but we did end up coming back and correcting ourselves. Let me delete this. You can see this fucking big ass wick. This is a big ass wick. I had this red line right here. This is an SMT. So if you do look right there, you could see on ES the same low right here took both of these key points. If you don't understand how SMT works, probably don't even watch this video. But anyways, moral of the story is ES took it, NQ didn't. So we did put an SMT there. So I was thinking, okay, maybe potentially we could reverse, but I wasn't really sold on anything. As you can see right here, actually, if you go on the 5-minute, there really was no gaps, fair value gaps here to even take a trade off of to go short, because that's what I was looking to do, except for this one. The reason I didn't take this, the setup would have worked, but the reason I didn't take this is, as you can see, we did invert this 5-minute, which is actually annoying as fuck. Because if you go down to the 1-minute, you can actually see we had a literal, look at this trade, bro. You could have basically took this, well, for my model. As you can see, this is the highest fair value gap, highest time frame fair value gap, I believe, in that leg. Never mind, it was a 2-minute. So let me just adjust that real quick. All right, so it was a 2-minute. This was the candle that inverted the gap. So I put my stop loss up at this wick, and then I was going to put my take profit right here. Like this was the trade I was literally about to take, but then I realized that this gap got inverted, which is very unfortunate, but it did end up playing out for 2 risk to reward. Go like that. It did end up playing out for 2 risk to reward, 2.3, which would have been nice. I did end up only making 1 R today on my trade, so I will go over that now. This gap right here was a 5-minute gap. Okay, so at this time, we literally had created no new gaps. Obviously, we had this one that we inverted, but we had created no other new gaps. But then over here, we did start to see a reversal, and then we started to see a move higher. There was another inversion play down in this wick area, right over here. The reason I didn't take that is because there was really nothing to target unless we were going to long from here all the way up there. That's really not that high probability, so that's why I didn't do that. As you can see, we did end up making this 5-minute. Then we ended up making this 5-minute. So I was looking to see if this 5-minute could close, and then we can maybe come down, tap this one. As you can see, that did not happen. We took out this buy side liquidity first, but we left these highs intact. That's why this trade was absolutely A+. If you go down to the 1-minute, as you can see right here, we made this high barely missing this other high right here. So now we have relative equal highs. And then as well, we have another high right here stacked on top. So some low resistance highs. Now, this was more of a discretionary trade. The reason that I say that is because there's this fair value gap, this fair value gap, and this fair value gap up here. So normally, I will wait for the highest time frame fair value gap in the leg to get inverted. If you go on a 2-minute, there was no fair value gap. Okay, so the highest was a 1-minute. Now, on this 1-minute, there was this leg that tapped into this fair value gap. So let me just delete these for a second. This right here was the 5-minute gap. So we did tap into the gap perfectly. Perfect V-shaped recovery out of it. Now, I didn't want to wait for this candle right here, like this fair value gap, to get inverted to enter. Normally I would, but why wouldn't I? That's 0.6 R. Obviously, I could have targeted this high, but I want this high. This is the easy, low-hanging fruit objective, and I want to basically make money. So, obviously, you would have made money there too, but you'll make money doing this a lot more often. So, entered right there. On this inversion, so we had inversion and inversion, these two fair value gaps right here. So that's why it's more of a discretionary model, because I didn't wait for that last one to get inverted, but I was very confident on the draw. And because we had tapped into this 5 minute and got a perfect V-shaped recovery out of it, I feel like it was still a completely A+ trade. So yeah, we did end up literally hitting my last objective, and that being almost the high of day. Was it the high of day? Yeah, it was the high of day. So yeah, that's how you fucking pick targets. Anyways, yeah, I mean, literally perfect market maker model, perfect trade, absolutely A+. I should have made more money on this trade. I didn't. I normally risk 250 per account. So with this 1R, it should have been 250 per account. So it should have been 750. Reason it wasn't is because of the volatility from FOMC. As you see, this stop is 47, almost 50 points. So if I were to risk 2 contracts, it's 200 on micros, 300. There was no middle that I could do. So it's always better, especially on these higher volatility, like higher, basically just crazier days. It's definitely better to at least go for a little lower risk. Like, you don't want to under risk too much, because you don't want to fuck up your model and your edge, basically. Like, you don't want to fuck up your profit, your equity curve over time. But in this situation, to risk $50 less opposed to $50 more, I feel like I definitely made the right decision risking $50 less. And yeah, that's basically it for today's trade recap. If you caught this trade, good shit. If you caught this trade, don't know why I took that out the inversion of the 5 minute, but good shit. And yeah, that's basically it.